Welcome back. Well, it's still capital raising season, and a couple of banks are leading the charge right now. But today we'll zero in on Access Holdings plans and what's in it for investors. Join us for this conversation as Mr. Teslim Shetabay, the managing editor, Proshare, joining me right here in the studio. Good morning. Great to have you.
Good morning. Thank you for having me.
Fantastic. So definitely we see the banks now tapping the markets right now, and Access Holdings, they're right there at the forefront. Talk to me about why they chose to actually go with the pricing that they're going right now and the rationale behind their listing at this point.
Okay, if we start off with the rationale for their listing, obviously the central bank has stated that any bank that wants to engage in international transactions should have a share capital of 500 billion naira. And if you want to stay national, 200 billion naira. So the obvious reason is to show up their share capital, straight up. But the Access Bank issue is particularly interesting because they're trying to raise 351 billion naira by way of rights, saying that, you know what, we have so much confidence in our existing shareholders. We don't need to invite any other person. They have an understanding of what we intend to do, how we intend to do it, and therefore we rely on existing shareholders. And that's why you're seeing them have this massive rights offer of 351 billion naira.
And how do you think these investors are actually taking this at this time? Do you think they're going to be as optimistic, as the bank is?
Well, yes, I think they will be. Access Bank has just announced, I think it was within the week, that they had expanded into Tanzania. The East African economies are doing quite well. Access Bank is there, for instance. And generally speaking, the banking sector for Nigeria has gone on a growth trajectory that all of us have seen. They've had massive amounts of growth and improvement in their fundamentals. Their cost of capital has gone down. The cost to income ratios have gone down. Their non-performing loan ratios have gone down. So generally speaking, the sector as a whole has done quite well. And that has been highlighted in Proshare's Tier 1 Bank report for 2024.
All right, so definitely, investors want to put their money where their mouth is. They want to know why they're actually, going into this market. So talk to me about the long-term and short-term benefits that you're seeing for shareholders here.
Well, the thing about it is that investors normally are optimists because they're investing in the future of a company. And the truth of the matter also is that if you're buying the equity of a company, you should have a long-term mindset rather than a short-term mindset. If you have a short-term mindset, you're a trader. If you're an investor, you have a long-term mindset. Because for all the banks, when they raise their share capital, obviously their earnings per share in the short term will decline. That means also dividends per share will also decline for all the banks. However, what's the long-term play? Now, we've just given an example of Access. They're going all over Africa. So that does what? It de-risks them from the challenges of any individual market on the continent. So if Nigeria has a challenge, for instance, they're still making money in Ghana, they're still making money in, like I said, Tanzania or Malawi or Zimbabwe. So the thing about it is a long-term play. In the long term, previously there was no Nigerian bank in the top 10 banks in Africa. Currently, we have 4 Nigerian banks in the top 20, and Access Bank is one of them.
All right, talk to me about the risk of dilution now when it comes to existing shareholders.
Yeah, now the good thing about it is that if all the shareholders pick up their rights, there's no problem of dilution. Like I said before, unlike banks that will go for public offers or private placements, Access has said we have confidence in our existing shareholders. So you get 1 share for every 2 that you hold. And if you pay for it, there's really no share dilution there because you still have the same proportion as you had in the past. And so there's no dilution. However, where the challenge might be for those who are short-term players is that earnings per share of all the banks, including Access, we expect to decline. However, that's a short-term position. In the long term, the additional capital allows for expansion and growth in the areas of technology, in the areas of intercontinental presence. So it's now about places and spaces. And for Access Bank, we've seen them play creatively and constructively along those lines in terms of taking places and using technology to occupy spaces.
So, definitely looking at the macros, at this time, you see rising inflation, currency devaluation and all the other, issues at this time.
Yes.
I'm sure most of these banks have not really had to raise capital at a time like this. Most times you see we've not had this, high inflation. So definitely this poses some kind of difficulty for most of these banks, I want to believe.
Okay, yes, so let's take it contextually.
Right.
We've had capital raises in the 80s. We had in 88, we had in 91, 92, right up to actually to 1999, when we started what we called universal banking. It was increased to 2 billion naira. If you look at the charts and you look at Nigeria's gross domestic product growth, the capital raise and the gross domestic product growth didn't show any correspondence. You would have expected that once banks raise capital, they will put that capital to work in the economy, and then GDP growth will increase. That didn't happen. But in 2005, 2004, 2005, during the Soludo era, during the bank consolidation, we saw a change. From that era on, we started seeing that the capital that banks were bringing in was also increasing GDP, right? So we've seen, when we moved to 25 billion naira, the GDP started steadily growing up, and then we also saw banks see their businesses grow. So let's come back to what you said about inflation rate. Yes, the inflation rate could be there, but is that necessarily a bad thing for banks? Has inflation necessarily hurt banks over the years? Our research says no, it hasn't, because banks deal in the business of margins. It's the difference between how much they pay depositors and how much they lend to lenders, borrowers. So we are looking at, say, okay, fine, I can take money, for instance, at a certain rate, and I lend it out, and I have a 7% spread, because banks deal in spread. That's how you hear things like margins. So they deal in spreads. Their spreads are always protected, because they always make sure that those spreads are there. So even if prices go up, they move up, right? So if deposit costs go up, then the lending costs also go up. So really their spreads are protected. Right?
Quite interesting. These banks always do well regardless at this point. But let's look at what to expect, for dividends and the share price.
Like I said earlier, I think, and Proshare's position is that in the short term, we believe that earnings per share will decline. And that's because there's so much new shares coming in. They're growing at a rate faster than the rate of growth of the bank's earnings. The bank's earnings will grow, but they won't grow at a rate as fast as the growth in their share capital. Therefore, earnings per share will decline. And your dividends come out of your earnings. So your dividend per share will also take a slight knock. But that is short term. It depends on how the bank applies the fresh capital that is coming. So as the bank applies that capital and makes it sweat, we begin to see earnings ratchet up pretty quickly. And therefore, share prices also rise as those earnings grow. So in the medium to long term, good prospects for banking sector.
Right, and I keep asking this question at this time. There's a cost of living crisis right now. Yeah. We have some investors that have been on the sideline. Some that don't even care about investing at this point. Then we have the investors. What's your advice to most of these investors about these shares we're seeing at this point?
My advice is that if they have liquidity, I must admit, many of us don't. But if they have liquidity, it's an opportunity.
Right.
It's a good opportunity for them to take advantage of the relatively low prices that they will see now and wait out for a couple of years, and then they begin to earn significant capital gains.
Right, so regardless, try to invest at this point. Thank you so much. I'm Mr. Teslim Shitabe, Managing Editor, Proshare.
Thank you very much.
Thank you so much for coming on the show. All right, so there you have it, and we saw the local boss actually buck the three-day positive trend. That was yesterday with that negative close. But we'll take a quick commercial break right now. That's it from me on Business Morning before we hand you over to the Sunrise Daily team. Bye-bye.